Hello traders, this is Antony. Welcome back to our video today. And in this video, we are going to talk about how to mark the valid break of structure and also how to identify a fake break of structure. So before I start, let me start by apologizing for not making this video soon. But I was kind of busy, but they say better late than never, guys. So I hope you'll understand and bear with me. So secondly, let me take this opportunity to welcome any newbie or anyone who is new to the channel. So my name is Anthony, and in our channel, we basically talk about SMC concept. So if this is one of the strategy that you would like to learn, then I can promise you that you are in the right place. So stay tuned. So what only I can urge you is to click on the subscription button and make sure to turn on the notification bell so that you'll be the first person to get notified whenever I upload a new video. So without a further ado, let's do our video. So I've kept promising that I will make this video to show you how I personally identify a valid break of structure and also those fake break of structure, because in the textbook these things will not be mentioned. They don't talk about these things in details, but the good thing is that I'm here to help you. I know most for example, like uh, a beginner will face a lot of challenges to identify a valid break of structure and also change of characters, because in the market you can just see everywhere you are able to see a break of structure and also a change of character. But the question is, are you able to identify which break of structure is tradable and which change of character can you take part in? So don't worry, because that is what we are going to do today. So I'm going to do an illustration on a bullish trend and also a bearish trend. Then later on in this video, I will show you an example from the market on how to mark a valid break of structure and fake BOS. So if that is something that you would like to learn, then stay tuned till the end of the video. And I can promise you, this video will be worth your time. So now this is how I do it. So from the illustration that you can see here, we are going to start with this bullish trend. These points that I've highlighted with the blue marks, those are the swing points. This is the swing high, this is the swing low, this is the swing high, swing low, swing high, swing low, then our swing high. So the market here is trending to the bullish, to the upside, making the higher series of higher highs and higher lows. I hope you understand that. Now, when it comes to marking a valid break of structure, for me to say this break of structure is valid, it has to sweep liquidity. That is the point. If the break of structure has not swept any liquidity, then for me, that break of structure is a fake BOS. So for instance, like you see here, this is our swing high. This was our previous swing low, or maybe an inducement, or something of that sort. So market came down, swept that liquidity, then pushed to the upside and broke structure to the upside. Then by doing so, then this becomes a valid break of structure. So after that break of structure, you saw there is a pullback here. Then market pushed to the upside and broke the structure. But this break of structure is different from this break of structure. Someone tell me, what do you think is the difference? The difference is, if you have said that this break of structure has not swept any liquidity, then you are correct, because there was no liquidity in this impulsive move. So now this break of structure tends to be a fake break of structure. Now, when I see this, then I know very well that this low is going to be induced as well, because the market has not swept any liquidity. So that's where you can see market came back, swept this liquidity, before starting to push to the upside. I hope you're getting the point. Now, after this pullback, market pushed to the upside, pushed to the downside, to the upside, to the downside, then pushed again and broke the structure again here. So this also is a valid breakup structure. The reason we are saying it's a valid breakup structure because it has swept liquidity. So it induced this low before pushing to break the structure to the upside. So after doing so, market has to come back and sweep liquidity. So this is the available liquidity. We also have another available liquidity here. Remember, market can decide to sweep both of them or can decide to sweep one of those liquidity. So still, I'll make another video explaining to you because here I can see we have this is what I call the major inducement, and these are what you call the minor inducement. Sometimes market can make minor inducement, can leave the minor inducement somewhere here and make the major inducement, comes and sweeps only the major inducement and push to the upside there. So in this scenario, this was the major inducement and these are the minor inducements. So the difference is for the major inducement is formed after the break of structure. Are you getting? But for the minor inducement is formed before the break of structure. So this is an example of minor inducement. This is an example of major inducement. So I don't think whether you are getting the point, but I believe you have understood how I mark the valid breakup structure and also the breakup structure. That is a case of bullish trend. Now, with the bearish trend, is simply the opposite of this one. There is nothing different. Now, let's see the example of a bearish trend. It's just the same thing. Now, you can see here, for this bearish trend, I've used these red highlights. That is to show you the swing points. This is our swing high. These are swing low, swing high, swing low, swing high, like that. Swing low, swing high. So the market here is trending, making the series of lower low, lower highs, lower low, lower highs, lower low, lower highs. I believe that if you have been trading for a while, you know what I'm talking about. If you are a beginner, so when you are in a bearish trend, market trends by making the series of higher lows, lower lows, and lower highs, lower low, lower high, lower low, lower high, lower low. So don't worry. I know for a beginner, these things tends to be challenging, then and also confusing. But with the time, I can promise you, they'll just make sense. So, what I can advise you is that don't give up. Just keep learning. Invest in learning. Like any other profession. Remember, for you to be a doctor, a professional doctor, you have to invest in learning. You have to undergo the system of learning. You go to primary school, you have the secondary level, and also you have the tertiary level, that is the university or the college. Then from there now you will be certified to be a professional doctor or any other professional that you can think of. The same to trading. Trading is a profession. You have to invest in learning. I know as a beginner you want to make money from trading, or maybe because you saw a friend of yours making money or someone floating social media with those big cars and a lot of money. So you came to the market with an idea of making money. There is no easy money in trading, guys. So you have to invest in learning. That is the point. So when you are starting off with the trading, don't care about the money because the money is the end result of the trading. If you invest in learning, if you know what you're doing, then the money will come automatically. So that was just a by the way, but it's a very uh, important point to note. So With this illustration, you can see this push to the upside swept liquidity above this high here. So it induced that low, that high, before pushing to break the structure to the downside. So now this becomes a very valid break of structure. This is a fake one because never swept any liquidity within uh this move to the downside. You see this big move, there was no liquidity that was left. So this high here becomes the inducement. And which type of inducement is this? This is a major inducement since it is formed after the break of what? The break of structure. That's why you can see market came back, swept liquidity, and then push to break another, to break this previous swing low. Now we have this minor inducement. We have 1 and 2 minor inducement. So this, for this example, market swept both inducement, then pushed to break the structure. So that is how I mark my valid break of structure and also a fake break of structure. Now, that being said, I would like to go to the chart and show you how to identify a valid break of structure and also a fake break of structure. So allow me, this is a Euro AUD pair. Allow me to start from this point here. Okay, so this is a 4-hour chart. This is a 4-hour chart. You can see here from this end, the market is trending to the downside. I want to show you how to identify a valid break of structure and also a change of character. So from what we have learned that for us to say this is a valid break of structure, we have to see either high or a low being induced before a break of structure. Now, from here you can see the market is trending to the downside. The market is trending to the downside. If I can start from somewhere here, let me start from somewhere here. You see this pullback to this side, then push to the downside. Market swept liquidity below this low. After sweeping that liquidity, tried to push to the upside, came down and swept liquidity also below this low. So after market swept this liquidity, it pushed to the upside and swept this high. Are you getting? The market swept this high here. You see, that is a sweep of liquidity. So after market swept that high, it pushed to the downside and broke structure. Remember, guys, for a break of structure, another point to note here, if the, for example, like here, if the market does not close with a candle, you see, this was the previous low, this week. The market never closed here with a candle. So we cannot say this is a break of structure. This is a sweep of liquidity. I don't know whether you are getting. If the market does not close with a body candle, that is not a break of structure. Although there are those traders that will mark this one as a break of structure. But for me, that is not a break of structure. Until I see a body candle closing below this low, then that will never be a break of structure. Now, this is a valid, this is a break of structure since, you see, there is this first week, you see this candle here, never closed below this low with a body. It's just as weak. So that is not a break of structure. That was a sweep of liquidity. But this candle closed below this low with a body. So now this becomes a break of structure. And this break of structure is valid since it had swept liquidity. And you see, there was a sweep of low first. Market swept the low before going to sweep the high. Then pushed to the downside and broke the structure. So now this becomes a valid break of structure. I hope we are together up to that point. Now, this one is not a valid break of structure. You see, This one is not a valid breakup structure. Also, this is not a valid pullback. I think I've made a video on how to identify a valid pullback. You see this candle here. This candle low was never swept before the pullback, and also the candle high was also never swept. So this is not a valid pullback for me. Now, the only place that I can see a pullback is here. You see, this last bearish candle before the bullish candle. This bullish candle swept the low of the bearish candle before pushing to the upside and swept the candle high. So this is a valid pullback. And also this is also a valid pullback because it is swept the candle low before sweeping the candle high. Although um, that is not just what I look for when I look for a valid pullback, because I have rules for that. For example, I have to see three bullish candlestick, not bullish, but three consecutive candles that are closing above or below each other. That is one of the major uh, rules that I use to identify a valid pullback. I made that video. You can find it on my channel. It's somewhere on my channel. Now, continuing, uh, after this break of structure, where do we see another break of structure? We see a break of structure here. But now this is not a valid break of structure. You see this? We have this break of structure. But for this break of structure, this is what we are calling a fake break of structure. Reason being, never swept any liquidity anywhere. Push, push to the downside. Now this becomes the major inducement, because after this break of structure, we can't see any valid major inducement, but this is the only major inducement that you can see. After that, what you see? Market came, swept the inducement above this high. You see that sweep of liquidity. After that, market came back and broke the structure to the downside like this. Now this becomes a valid break of structure. Why? Market swept liquidity before breaking the structure. Are you getting the point? So now let's assume now you are a beginner and you see this break of structure. You see, what will a beginner do? A beginner will look for an order block somewhere here to take this trade. And what will happen? They will end up being stopped out and they will be wondering, what did I make? What did I do wrong? But now, don't worry now, because you found this channel and you found me, and I'm here to make the journey to be easy, because this is how now you make how you identify a fake and a valid break of structure. Now, what does that one mean? That one means now this is our strong high, this high here. This is our strong high, can call it protected high, and this is our weak low at this point. This is our weak low. Call it, this is our weak. So what does that one mean? It means now we are not expecting the market to break this high, but we are expecting the market to break this low. Allow me to close that. Sorry for that. It is an alert. With alert in my chat. So sorry for that. Okay. So what does it mean? We are not expecting the market to break this high, but we are expecting the market to break this low. So if by any means this high gets to be broken, then that means that is a change of character. I don't know whether you are getting. This is our strong high and this is our strong low. If the market breaks this high, then that means this trend to the downside, it's over. So let's extend this line of ours and see. You see, the reason why we are saying this high is very strong. You can see the market tried to break at this point. it failed. Came back again, tried to break this high also, and also failed. Until the third time when it came back now and broke this high. So now you see, this now becomes that means this was a very strong high, and this high was not meant to be broken. And if it is broken, that means now this trend is over. The bearish trend is over, and market is now willing to push to the bullish direction. So now this changes to become a change of character. Then this becomes our protected low. This will change now to be our protected low. Now the trend has shifted from bearish to bullish. Are we getting the point? Now another thing here, if you are a beginner now could have said this is a break of structure. You see, a beginner could have said this is a break of structure. And not even a beginner, maybe also someone who has been trading, but maybe you have not been. You don't know how to identify a valid break of structure and also a fake break of structure. You see, you could have in the lower time frame, this is a valid pullback. This one is a valid pullback in the lower time frame. Someone could have said this is a break of structure. What could have that person done? Would have identified this one as an order block, it's a supply zone. Then you place your a limit order to this point here, stop loss above the high here. Then the target maybe down here, 1:2. Then all of a sudden you get stopped out and you are wondering, what did I do wrong? Could someone tell me what did this trader do wrong? Where did this trader go wrong? If you have said this trader did not know how to mark a valid break of structure, then you are correct. Because this I here acted as what? An inducement. This I here acted as an inducement. This is an inducement. This is a major inducement because after this break of structure, this is only valid pullback before push to the downside. Then this became an inducement. Now, so the only place that you could have looked for a sell is within this area. You see, this last bullish candle here, and the last bearish candle here. This last bearish candle before this fair value gap, because I can't see any fair value gap within this area. So this is the only place that you could have looked for a sell. And you place your order here, that means your stop loss should be above this eye here. Stop loss should be above that eye. And you see, that trader could have been in some profits before the validation of the trend. Now that you know how to identify a valid break of structure and change of character, let's continue. Now, after this change of character now, remember the trend has changed, has shifted from bearish to bullish. Now, where is our inducements? Where is the liquidity now? If we look here, now another point to put across here, whenever market takes out an external structure or external liquidity, so whatever was inside here becomes liquidity. So this law becomes liquidity. So that is liquidity. This law also becomes liquidity. This law also becomes liquidity. These are our liquidity. Now, which type of inducement is this one? This is a minor inducement since it occurred before the break of structure. Sorry for that. So what does that one mean? Mean that this is our liquidity we have, and these two liquidity here, they are what we call a relative equal loss. You see, we have what we call relative equal loss at this point. which is liquidity. So if you try to look at this law for here, you find that this law swept these two laws. Let me mark it well. If I try to zoom in, you'll find that this law of this candle swept liquidity below this law before pushing to the upside. So this is a sweep of liquidity. Then after that sweep of liquidity, what do we see? We have what? We have a break of structure. Very nice, guys. Very nice and very easy. Nothing complicated. Nothing complicated. So now, what does that one mean? Now, this protected low will shift from here to here because we have a new structure. We have a new dealing range. So this is our protected low and this is our weak high. So you see, the market pushed to the upside. We had a pullback here. Then here we have what you call a fake break of structure. I don't know whether you are seeing these things. This is a fake break of structure because this pullback never swept any liquidity before pushing to the upside. So now this becomes our inducement. This low would be our inducement. That is our major inducement. As you can see, market cleared that liquidity, then pushed to the downside, and I think reacted from this fair value gap we see here. There is this fair value gap here. So market reacted from that fair value gap and then pushed to the upside. And I think it should be at the discount. Yeah, very nice. You see, that fair value gap is at the discount. So this is our swing high, this is our swing low. Market came to 50%, reacted from this fair value gap, and then pushed to the upside. Very easy, very easy. So after that now, you see we have another break of structure. This is also a valid break of structure since it also swept liquidity. We have a break of structure. So after this break of structure, this is the only pullback that we see here. You see? So this break of structure, guys, is not a valid break of structure. So this is a fake break of structure since never swept any liquidity before pushing to break the high. So what does that one mean? It means now whatever is here, all this one becomes liquidity. In other words, we call this one a trend line liquidity. So all whatever we have here becomes liquidity. And that's why you can see market had to push to the downside and swept all this liquidity. And also it swept this liquidity also here. And where did the market react from? Do you see this indecision candle here? This candle with the long wick to the top and also to the bottom. Did it come here really? No, it never came to this candle. But I think we had never came to this candle. But after sweeping this liquidity, it reacted from here. So after sweeping this liquidity here, yeah, in fact, it came down here. I was not seeing this one. So the market came to this indecision candle here. This candle with the long wick at the top and the long wick to the bottom. You see? So this one I can mark it as demand. So market came to this demand zone and then pushed to the upside. Did we get a barrel of break of structure? Very nice, guys. So see here we have a valid break of structure. Now let's say something. If you are a beginner now and then you see this break of structure, do you know what the beginner could have said? The beginner could have looked for an order block here. And this is you can see here we have an order block with a small fair value gap. So a beginner could have taken a trade from this area. You place buy limit there. Stop loss, maybe you see, because Anton said the stop loss should be below the swing low. You place a stop loss there. Then I'll take profit there. Then all of a sudden you get stopped and then you get to wonder, what did I do wrong? But don't worry, because now you are informed, you know what to look for. That was it. So after that, we see any breakup structure, we have a breakup structure. Now this is a live market, it's happening right now. So now after this breakup structure, where do you see liquidity? Then only liquidity that I can see it is this low. So this is our liquidity. So where is our demand zone? You see this candle here. This is the only demand zone that you can see from this chart. So this is the area that we should be looking for a buy setup. You see this demand zone here. I don't advise you to take an aggressive entry here, because this is a 4-hour time frame. Market can decide. Remember, this is our strong low here. This is our strong low, what we call a protected low. So if you are to take a buy from this area like this, that means your stop loss should be here. And you can see that is a very big stop loss. That's a very big stop loss. Although the risk to reward is very good, but if you are swing trader, you can place a buy limit here. But if you are someone like me who like to wait for a confirmation, then you should wait for the confirmation. When the market taps to this point of interest, you wait for the confirmation. I think I will make a video explaining how I look for my confirmation entry. So stay tuned to the channel. Make sure you subscribe and also you click the notification bell, because very soon I'll be dropping that video on how I take my confirmation entry. So be watching this area now, because this is what we are having. It's a live market. Wait for the market to sweep this liquidity. Remember, the market uh, rewards those traders who are patient. So make sure you are patient. Don't rush to take trades without a reason. Wait for the confirmation, guys. And also uh, be very selective. Don't just take any setup. If the setup does not have all your checklist, if all your checklist does not check out, then don't take that setup, guys. There are so many pairs that you can trade. There are so many opportunities that the market will provide for you. So just wait for the good setup that aligns with your plan, then take the trade without the fear. So guys, that was it. That was it. And I believe now, if you have watched this video till the end, now you are able to identify a valid break of structure and also a fake break of structure. Where is the liquidity? How can you identify the liquidity from the charts? So if you don't understand for the first time, make sure you watch the video several times until you are able to understand how to uh, mark valid break of structure and also the change of character. So guys, that was it on this video. So if this video was good for you, if this video was very educative to you, if you have learned something from this video, so make sure to leave a comment on the comment section, like the video, and also most importantly, make sure you subscribe to the channel. So until next time, it's a bye bye, guys.